So let's talk about why crypto dumped today. Yes, the stock market dumped, but the Dow wasn't actually down that much. 180 something points. That's like not really all that much compared to how high the Dow is right now. Does Nasdaq actually dumped a lot more, and crypto does flow a lot more with the Nasdaq being the tech sector. However, the real reason is because the interest rates are going to stay high, and that's because the inflation for the service sector is going to stay high as well. The service sectors like hospitality, retail, and things like that. It's not like the actual price of the groceries and all that stuff. That's actually calmed down quite a bit. But the service sector, when you go out for like dinner or you take a motel or something like that, those things they've come down in terms of inflation, but they're still stuck at about 3%, as they have been all year. And because of that, the overall inflation rate hasn't come down below around 3%. Now it's come down from like 9% to like 3% from like 2021, 2022, but they want to get it to around 2%, which right now is still not happening because the inflation in that sector, I think mostly because it's like greedflation, is actually driven really, really high. So, with that prospect coming, the treasury yields actually jumped today, both on the 10-year and the shorter term yields as well. With the treasury yields actually jumping that high, people are going to be more interested in investing in bonds, CDs, and that kind of stuff than crypto. So, forward looking wise, crypto dumped. Now, I don't think this dump will last a very long time. It actually dumped down to like 96. We've already bounced back up to 97. However, there are labor reports and other numbers coming out later in the week, and if those are bad, we could dump down all the way. We could dump all the way down to 92 again. I do believe like 92 is the bottom, and we won't dump any further than that. And I think it will be a knee-jerk reaction, and by next week we should be back over $100,000. No, I don't believe the double top is signaling that 108 was the top. I'm not really concerned with that. I think we will go a lot higher. We might not get there until after the inauguration. We'll have to see what Donald Trump actually does, whether he does like a strategic Bitcoin reserve or like keep some of those promises that he's actually promised the crypto industry. But overall, like I'm still very, very positive about the market. Like I said, I do think this is a short-term reaction. And yes, people are concerned that the interest rates aren't going to come down as much as they thought next year. And next year, we're only going to get half a percentage point cut. But half a percentage point cut is still half a percentage point less than what we have today. And that is still the interest rate coming down, making money more accessible, making money easier. Now, obviously, people want 4 cuts or a full percentage point next year. But it really depends, like, how much the inflation can come down from 3%. I'm pretty sure the Fed is not going to print money, regardless of what the president or Congress wants, because we haven't printed ever since that COVID pandemic about 2 years ago. And Jerome Powell has never really cared about who's in office. He didn't really listen to Biden, and I doubt he'll actually listen to Trump if he wants to cut those interest rates faster. I think he's going to keep going the way he's going, and he's actually done a really, really good job. There's no reason for QE. The economy's not really falling apart. We're doing this fine at this point. But I think QT might continue to loosen a little bit, but not as fast as people want. I think people got really used to super low interest rates, in the 10, 15 years prior to COVID. And since we're not actually getting that back right now, I think some people are a little bit antsy. But I do think they're going to just have to adjust to like a slightly higher interest rate kind of environment. It's going to take 2 or 3 years before we get down to the neutral rate about 2.5, 2.25%. And we're never going to get down to 0% again because that's really not what we're supposed to do anyways. So realistically, that's why we went down today. It wasn't because any like devastating news or scandal or anything. It was basically because the service rate inflation has remained constant, hasn't really come down, stuck around 3.1%, 3.2%, something like that. And people wanted it to come down so the Fed would actually like cut more interest rates. But with this, the Fed might hold back the interest rate cuts. They expect no cuts for December, and I'm guessing no cuts for January. Sorry, and I'm expecting probably like no cuts until like May or mid-year, and businesses don't like that. But it is the best thing to do for the overall long-term health of the economy. Remember, Jerome Powell's job is not to pump your crypto bags. He wants to nail a soft landing, which he's mostly done, but it might not be the best move for the crypto market. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button. Thank you, and have a nice day.